for us, when we actually started the bank, we started on actually specifically 2 mandates. The first mandate that we're working on, given that we're a digital bank, is really using technology. Some data points, in Malaysia, whilst less than 8% of the population is unserved, a good 55% of the population in Malaysia is actually underserved. So there are great opportunities to try to advance and to bring the right financial products and solutions to the underserved segments in Malaysia. We're starting on a blank piece of paper, right? And this blank piece of paper enables us to design from scratch and right from the beginning to put customers right in the center, right, of all the designs and all the new developments that we wanted to bring in. Number 2 is that given that it's a blank piece of paper also means that we have got no legacy systems that we need to worry about. And therefore actually giving us the opportunity to bring in the best technology out there and to bring that forward to I think enable access to customers, to make sure that we are able to find opportunities to innovate actually new solutions. It could be actually from the product itself to the way that we engage them, because fact is that we are completely digital, right? We've got no choice. So we need to engage them digitally, and we find different ways to engage them in a seamless way and in an accessible way, and in a way that I think today's incumbent bank, it's harder to do. Maybe I first off talk about the advantages of actually having to come from an incumbent bank and a commercial bank and then moving into a digital bank. The first is that even in GXBank, we've got 50% of us are bankers, right? And bankers actually from the incumbent banks. So what we bring actually to the table, it's really the deep banking 101 knowledge that we know actually how a bank needs to be run. It enables us to take all the learnings that we've had actually over these years in an incumbent bank, and some of these areas that we felt that it could have been improved if we had actually designed it better right at the onset, and bring that forward and then actually try to design it right. Now actually in this environment, in the time where the technology is amazing, where we're able to actually start with a clean slate. Knowing and be very purposeful of what we're actually trying to serve, or whom we're actually trying to serve, which are actually the underserved, enables us to then come in and start disrupting in a way that it's difficult to do actually if you were in an existing organization with lots of legacy technology platforms that you need to work with. Number 2 is that we are completely cloud native. We are cloud native. We are data first, we are digital only. Right. So what it means is that with the ability to take all the data that we need and compute, right. And with this data and with being able to compute also means that we're able to respond if we're actually designing our technology stack correctly. And our technology stack, it's made up of many microservices, made up actually in modules, are made up actually in an agile way. So what that means is that as customers' behavior change, as their wants and needs change, we'll be able to respond. It's almost an open architecture, where we're able to work with many different partners outside and within actually the bank. And the ability to API out, actually all these different partners that we have, means that we'll be able to work with more and more different set of data sets to truly be able to, I think, anticipate for customer what is the next thing they may want. We come up with a relatively actually easy product and a very simple product actually with daily interest. And these design of these kind of products actually comes exactly from what we hear from customers. In a very early couple of months when we first started actually the bank, before we launched, we went out in tens of thousands of surveys and we asked customers, why is it so difficult for you to serve? So they tell us this: 1, It's really hard to actually save because there's no incentive to do so, especially when my money that I save is actually so little. Second is that, Pei Si, I not only have one account, I've got accounts in 5 different places because I want to put one account actually for a certain type of savings. One for my wedding, one for my property, one for my car, one for a holiday, and then one for my normal use. So actually listening to all these, then what we then came up with is come up with a deposit account, to your point, not very difficult, different pockets so that we'll be able, customers to parcel out actually different savings in different places. And to make it more fun, the next biggest product or need that our underserved segments are telling us they need is they need access to loans. They need access to lending. Because today, not everybody actually has equal access, right, to the loans they need, whether is it in the right interest rates or as at the right speed or actually the right quantum. The next product that we're working on, and it should come out actually by the end of the year, would be a retail lending product. And again, we'll listen out to customers to hear what they're telling us that's difficult today, what they would like to see next in their retail lending product. And we expect it to be a bit more flexible. We expect them to be able to pay off actually as and when they want to pay off. So that's going to be the second product. Third is, because I have gone out also in public to say this, the banking license in Malaysia enables us to not only bank the individuals, but also actually bank the businesses. And given that one of the biggest underserved segment are the micro SMEs, we are also planning to go out for to build for the next segment. That's the micro enterprises. The opportunities within the micro SME space, it's a large one. Because certainly actually in Malaysia, as it is, it's already quite difficult to open an account. So to first be able to enable the opening of an account digitally and seamlessly, it's going to be an important first step, right? Before we then get on to your point, actually working capital and so on and so forth. Well, 100%, right? We are a digital-only bank. So we do not have and will not have a brick and mortar, right, at all. So what that means is that we will be, and we can only engage with customers through the app. Today is a mobile app. We've got 24/7 chat as well as voice actually with customer. And that's the only way to engage customers. So therefore, it's really 100%. Okay. Second is that it's an important distinction actually for us. We don't see ourselves as first a bank. We see ourselves first as a technology company offering banking products and solutions to our target segment. So what that means is that whenever we design, whenever we think about the next thing to do, we think about what process it should be, how we're going to reach out to customer, we think technology first. We think digital first. And that's reflected actually in every day that we do internally as well as externally. I would say actually that from a definition perspective, we define actually underserved, right, as those who do not have access to financial services. And in that way, a good 55% of the population in Malaysia, right, are actually underserved. So from the perspective, we think we do serve a large proportion of them. Yes, our biggest shareholders are Grab, as well as Singtel, like on the other end. And given the Grab's market share, right, our market in Malaysia, we do have access to the ecosystem. So we are what you would call an ecosystem bank, right, from the perspective. So therefore, if you're familiar with some of the rewards or to our customers, a big chunk of our rewards are rewarding Grab users whom also bank with GXBank. We've already actually started using some version of artificial intelligence, right, to build models, right, in anticipation of how customers may respond to how we engage with them, how we'll be looking at engaging them actually through chats as an example, right? If the model is actually being trained, as we would call it, right, as we accumulate more and more data to make sure that it becomes smarter, right, and to enable actually a good response, right? AI is also actually being used to, and will be used more extensively, I think, in areas of fraud, managing fraud, monitoring, also actually for behavior, right, and actually credit risk, so that we'll be able to I think, innovate the way that the average bank is able to engage with customers going forward. Actually, it's a very big focus for the bank. Given it's a digital bank means that you're not able to actually see our customers and the users actually face to face. And that takes away actually an element of verification and validation that an incumbent bank actually has. But the pluses of actually being able to being a digital bank and to manage actually fraud is that because we have the access to very progressive technology, whether it comes to anti-fraud monitoring or cybersecurity measures, right, and platforms, means that we'll be able to have the right tools to actually manage, being able to also actually collect lots of data, and we collect those data in real time, in volume, in big volumes, and we are also actually building models actually around it. What that means is that we are really actually on a 24/7 monitoring of all these different potential fraud activities, and because it's also about how you respond and how you respond quickly, and how you actually learn from them. So with these three sets of competencies we've been able to build as a digital bank, enables us to think, to get to a little bit of forefront how we then manage actually fraud, right? But I've been a banker for more than 20 years. I think fraud is inevitable. You will see that because we run a business, and this business comes with risk. And it's about then getting the right tools and the platforms to mitigate those risks. And in this way, I think the banks of today, regardless of whether you're digital or non-digital, are much better equipped with the availability of monitoring systems, monitoring platforms, as well as detection platforms actually out there. The digital banks in Malaysia actually operates in the same banking regulation framework as any other banks, any other commercial banks in Malaysia, and specific actually to fraud and technology risk, right? We're all under a technology framework, right, which is RMIT. Now, therefore, actually from the perspective, digital banks are not formally actually placed on with a greater burden or a greater expectations by the regulator to make sure that we're able to comply. But having said that, every digital bank, including ourselves, given that we have access actually now to the most progressive technology actually out there, we place those standards on ourselves. Because it's so important, especially when you're a new bank, you do need to build trust. From the perspective, we learn from each other on what to build and what not to build, and how to actually respond. So it will be good if none of us are actually in any situation where when there's actually downtime. Two is that it's really actually about also how we respond to this downtime. That's important. That's where the learning and being able to work within the framework and the expectations of the regulator is going to be important. No customer, no banking customer loves to bank. There's no such thing. So it is really actually about, therefore, making sure that for an average customer, banking is easy. It's got to be rewarding. It's got to be fun. So therefore, what that means is that the rewards that you get, and it must be able to not only rewards, but that every day when you use the product, it's got to help your everyday life. So therefore, we've got the 3% interest that we pay, and you get that interest actually daily. Oh. And being able to see that interest daily makes it fun for some people because they get to open the app, they see actually the interest they get every day. That's right, and encourages to save, right? And third is that I think, like we say, it's got to be rewarding. Because some of the choices that I think the bank makes, right, in making sure that we reduce actually costs in a certain way because we do not have here in brick and mortar, enables us to actually give back just some of these rewards actually back to customer. Because it's really about how do we make it easy for customers, how do we make it relevant actually to their lives. I think the welcome in Malaysia has been tremendous. So we did achieve 100,000 customers in under 2 weeks. Okay, so now that we're 120 days old, we've got hundreds of thousands. I think the momentum, like I say, it's about making sure that we keep rolling out relevant and user-friendly products that's rewarding actually for them. And after that, it's really about being able to keep them actually with us because they love the bank. I think given that we do have a very busy actual product roadmap this year, we'll be able to acquire, I think, different customers with different sets of needs, right, as we look into 2024. I think in a couple of ways, in 3 ways in fact. The first is that we're able to leverage off these ecosystem partners, as we call them, or shareholder partners. First, for their learnings actually around technology. Like I say, I think both Grab as well as Singtel are primarily technology companies. And they have learned and over many, many years how to use technology to engage customers. And that gives us actually tremendous strength. Second is around the ecosystem access. And then you've mentioned that you've been paying, Grab is big in Malaysia, right? And so is Jaya. And that both ecosystem means that it gives us two things. One is the access to the market, right? And second is data. Because through the tremendous market size that we have, and using the data that we've been accumulated actually over the years, we're able to build, I think, models of engagement that is going to be so much more relevant and rich, right, when we talk to our customers, when we actually try to engage with them. The third, to your point, in a wider group, because we are part of a wider banking group, not only in Malaysia, in Singapore, as well as Indonesia. That helps us to then actually learn from each other what has worked, what hadn't worked, and that richness in the learnings that we can actually get. It's tremendous because we take the best practices actually in different markets and then try to replicate them and then come up with, I think, innovative products as much as we can, right, to actually reach out to our customers. We do. We get together very often, in fact. We get together very often. Like I say, because we are all actually in a greenfield, I think, industry. We know that when we go out actually to the market, we cannot do exactly what everybody does because we are smaller, we are new, and therefore actually learning from each other on a different innovative way of actually engaging customers and bringing in new ideas and find ways to engage the underserved segments are so important, right? All digital banks in Malaysia, when we operate actually under the digital bank licensing framework, we have 3 to 5 years to be in what we call it as foundational stage, before we're able to graduate out of that phase.
Okay.
Prior to actually, when we are in a foundational stage, we are only able to grow our total assets actually up to 3 billion ringgit in total assets. So, therefore, really Boon Peng, actually for us, the mandate or the objective is very clear. What we do need to do is to be on the path to graduation. For us to be path to graduation in our 3rd year to the 5th year, we do need to first be on a path to profitability. Second is that we do need to fulfill the mandates, especially on financial inclusion in Malaysia, because we are set up to serve the underserved. The third is that at the end of that 3 to 5 years, where we ask to graduate at that point, we hope to also be able to change also how Malaysians bank in Malaysia. So it means bringing in innovative product, innovative way of, a different way of actually banking in Malaysia that will change how the industry should look at banking that particular segment. So these are the 3 that we'd like to be able to achieve within these 3 years to 5 years, so that we can then actually graduate and become one of the big boys. Today we are certainly encouraged by, like I said, the reception that we've had from Malaysians so far. So first off, it means that the average population in Malaysia is quite happy to actually bank digitally. Digital banking is the way to go. Everybody will bank digitally. That's one. 2 is that are we optimistic, right? To be able to be one of the major banks, right, in Malaysia. Fact is that I think milestone by milestone, step by step, we do need to make sure that we're able to first earn the right to graduate from the foundational stage to graduation, so that we're able to serve more customers in Malaysia, right? But we are very encouraged in our first 120 days. I think the biggest learning that we have, right, as we started actually bank is this. We are made up, I think, of, and it has to be, a motley crew of technologists as well as bankers. And with a very clear purpose of how we want to build the bank forward. So, and that's really going to be the most important ingredient of success, right? How do we get this crew of folks who have strong purpose and passion to actually do something different and to disrupt the market positively, to make us work together and get it going. I think the idea is about being open-minded, accepting that the new ways of banking will be the ways that will actually define how we're going to be successful. Be very brave to try new things and to experiment, and at the same time knowing actually what the specific guardrails are around risk control, to your point, fraud, because the market actually moves much faster than actually we can build, more often than not. So and very often we find ourselves actually running catch up, and then I think the ingredient that's important is that when we build, we must be able to build to enable actually catch-ups. Because that's where I think where it's always very difficult in any organization, because you're not able to respond. And that's, I think, the exciting thing actually around about building actually today and not 10 years ago or 20 years ago. Build to catch up with the consumer, build to catch up with the new technology, build to actually catch up with the fraudsters out there, right? Build to actually catch up to things that we don't even know it actually exists today. And that's extremely exciting. At the same